Hi, this is Zach Mayer with the Bulletin Board Heroes here at Zach's Traders Cafe for Thursday, the 20th of February. Starting off with the FTSE 100, where we've lost our 87.30 support. We've got an uptrend line there from last month heading for basically 86.50. Below that, there's the risk of a move obviously down to the 8600 level, which was the old January resistance. To snap the slightly negative development that we've got, we need an end-of-day close back above 87.30 to take us to the all-time highs around 88.20, and then best case scenario up to 9,000 by the end of next month. Although at this stage it's probably difficult to work out what could take the market that high. In terms of the RSI, still above neutral 50, so that would point to a bounce off 86.50 and then back up again after the struggle in the 8700 to 88.20 band. Moving along to the DAX, which has been flying of late, but fell yesterday. We've got support there at the bottom of the gap there, 22,200. Below that, the floor of the channel there from November, just above the 22,000 level. If we can get back into a bullish rhythm, then the top of the channel there for next month, 23,700 would be the best case on the upside. But above 22,000, basically looking for 23,700 on the DAX. Moving along to the Dow, and here we're between that resistance line there from the end of last month, so around 44,800, and the 50-day line, 43,700. And I suppose the longer we consolidate with bounces for the RSI above neutral 50, the more the chance of a break to the upside is on this market. Top of the channel there from March last year, heading for 46,700. That's our target for the end of next month, while we remain above the 50-day moving average, 43,700. But that consolidation for the RSI in the 50s is encouraging. Moving on to Bitcoin, which has been trying to find support at that uptrend line there from November, which is where we expected it to find support. So 94,000 the line there. Still the risk of 90,000, and also down to 85,000 if the rug is pulled. 85,000 was the support on the way up back in November. The negative here is that the RSI remains below neutral 50 and has been in the 40s really for the best part of most of this month. The positive is the way that the 50-day line is rising again at 98,800, so just an end-of-day close above that, and we could be looking at the best levels ever through 109,000. Moving on to gold, which is behaving as if we're heading for World War III. I suppose the line in the sand there, the target 3,000, so above that things are looking rather interesting on the geopolitical front. Support at the moment 2870. We've had a few probes below 2900 rather. 2870 hopefully will limit the falls here for this market ahead of a move to the 3000 zone, hopefully sometime later this month or early in March. Moving along to the stocks, and a stock which we haven't looked at for a long time, but had a decent update today, advanced, and here you can see the gap to the upside. It's the second gap higher in the recent past. The last one was unfilled, so that looks up, and obviously this one so far is unfilled too, ahead of a move through. Recent resistance at £1.57, 58 rather. Above £1.58, we're looking for up to £1.85 at the top of that rising trend channel from this time last year. We've already had a golden cross for the shares back in December, so this looks like a solid trending situation. Moving on to Borders and Southern, where well, there's a couple of things here. First is the rising trend channel, which has been in place basically since the turn of the year. We started the rally with an unfilled gap to the upside, in fact two gaps to the upside, and we maintained that within that rising trend channel. It's the floor of the channel there around 4 3/4 pence. Above that, we're looking for the shares to hit the top of the channel there as high as 8 pence by the end of next month. It's also helpful that with the fundraise announced today, the shares are actually up, which normally only happens in the strongest of situations. We've also had an RSI rebound above neutral 50, so pretty positive picture there for Borders at the moment. Moving on to another one of today's rises, Enteq upstream, and here we've already identified this as a potential rising trend channel base. The gap higher today through the 50-day line, and the solid candles that we've had opening at the low, closing at the high for the last 3 sessions suggest that there is some accumulation going on here. We bounced at the floor of the gap there around 1 3/4 above that. We're looking for up to 4 1/4 by the end of next month. It's a bear trap island reversal, so gapping down and then gapping up, and that tends to be the best charting setup around. Moving on to Greatland, which I suppose is feeding the benefit of the gold price and also its RNS yesterday. Here we're in a range between the old target here, which was 7.8 pence, and the retest of the recent resistance towards 9 3/4 pence. Obviously, if you look at the left-hand side of the chart, you can see that resistance on the way down was at 11, and that's probably the target we're looking for by the end of next month, while we remain above the 8 pence level. We obviously had a golden cross there at the turn of the month, which is positive, and the RSI also has bounced above neutral 50, which tends to be a leading indicator on the upside. Profits down, but the share price up at Lloyds since the second gap higher, so in fact third gap higher in the recent past, and basically shares within a rising trend channel there from back or the end of 2023. Top of the channel there at 75 pence, which is our favoured destination for the shares, while we remain on the right side of 60 pence and are looking for 75 by the end of next month. And we've also had a golden cross a week or two ago as well, which means that this is looking pretty strong indeed, despite the fundamental slip. Moving on to stock, which I think I first covered here on as a possible rebound on the 10th of February. So 10 days of joy so far. We're just about to try and fill the gap there up to 0.42 pence. We were looking for 0.35 to 0.4 pence, and that's basically what we've got. Want to break that line of resistance there, the falling trend channel from back in November at 0.38. Above that, looking for best case scenario target by the end of next month as high as 0.66 for the shares, especially if we can close that gap pretty quickly at 0.42. Moving on to Mirriad, and here you can see that we've had our rising trend channel base in place since the autumn. Top of the channel there is previously drawn up to 0.42. That's what we're looking for by the end of next month, especially while we remain above the recent resistance area around 0.2 pence, above 0.2. Looking for 0.4 pence plus. The 50-day line already rising, and we've had a sideways shuffle, as I call it, along that last week, which was the leading indicator on a move to the upside. And it has to be said, or we should remind ourselves, that the biggest and the best rises tend to happen after sideways shuffles along a rising 50-day line near the low of the range. So already Mirriad looking as though it's second time lucky in terms of the rally here to get back to 0.4 pence plus. On to Oxford Biodynamics, where from memory there was a placing at 0.5 pence, and we're back above that placing price now. Looking for the shares to hit the top of that broadening triangle there, perhaps as high as 0.95 by the end of next month. Obviously, we had that brief spike there towards 0.78, or 0.8 in fact, and that is the initial target while we're above 0.5 pence. Bit of bullish divergence coming in there as well, suggesting accumulation near the lows, and that makes the chart look all the more positive. On to Pantheon, where it's been a big winner in terms of the drill baby drill philosophy. We've got a wide rising trend channel there from June, although as you can see from the chart, the big turnaround here basically came from at the end of October, beginning of November, when maybe people were guessing that President Trump was going to return. Current situation is that above 59 pence, the initial February high, looking for 80 pence plus by the end of next month. On to Trufin rather, and here you can see that we bounced off the floor of a rising trend channel there, and we've got the 50 and 200 day lines ready to rise after the golden cross that we had back in December. Top of the channel there at 105, that's what we're looking for by the end of next month, while we remain above recent support at 76 pence. Wood Group is next, and an interesting one. Not really much of a chart at the moment, but so I suppose it's the fundamentals which are driving the situation. Here, I think we've had news of the departure of the CFO, which happened last night. The share's actually now up after that, which I think is possibly a good sign for the stock. Also, I've heard that one or two Scottish buyers are getting into the stock, bottom fishing the shares on the basis that the stock, Wood Group, won't be allowed to fail, and obviously it's got a massive order book there as well. And I suppose the other point is that Scottish investors tend to be quite careful with their money, so they wouldn't be going into this situation if they didn't think it was a potential win. If you are cautious, you'll be waiting for an end-of-day close of our recent 30 pence resistance, but otherwise, I suppose it's playing off against the low there around 21.2 pence and hoping that the low is finally in place. Moving on to the last two. The first one is Zanaga, and stock we covered quite a lot, especially with the in the wake of the big turnaround that we had at the beginning of December. Looks as though the shares are bouncing off the floor of that rising trend channel there from back in September. The level there around 7 pence and above 7 pence. Looking for the shares to make progress towards 15 pence, perhaps as soon as the end of next month. The other point to note, I suppose, is that there is a resistance line there from back in, basically the beginning of January, and we want to see end-of-day closes above that, around the 8.4 pence level plus over the next few sessions. Also an RSI 50 rebound, so potential here for at least a retest of the highs towards 12 pence. Only back below 7 pence suggests that we need to test that 200-day line at 6 pence before heading up again. Finishing off with Zenith, which has primed the market with the potential news, the prospect of news next week on its second arbitration. Here we've got a rising trend channel. We bounced off that. We had a good price action yesterday, opening the low, closing at the high, and we're already continuing in that vein. Top of the channel here, 14 pence, which we're looking for by the end of next month. I suppose if the news comes through, it would be by the end of this month. And once again, I've got a resistance line there broken around 8.25 pence above that, hoping that the shares will not only retest last month's peak, but also head up to the top of the channel. That's it for me today. More updates tomorrow.